Good afternoon. This is Brad Dennis with BIS Commodities with your weekly wrap-up for the first week of March, ending March 9th. Today we saw a lot of pressure on beans, pulling down corn, pulling down wheat. We are reacting to yesterday's supply and demand report, as well as progressively pulling rains forward in these weather forecasts for South America. In the bean market, there's a couple things that are going on there. Yesterday, we saw a bigger carryout than what we had expected. We were looking for 530 carryout, came in at 555. Even though the world bean carryout was lower, people reacted to that U.S. carryout. They saw that the USDA reduced the production number for Argentina, yet it wasn't where the trade had been trading it. We reduced it down, but not under that 45 million metric ton level. So with not reducing it as much, that put a little bit of pressure on the market as well. Weather-wise, rain for Argentina has been in the 6 to 10 day. That's being pulled forward. A very important picture will be painted on Sunday night to see if that makes that into the 1 to 5 day forecast. If it does, you could see some further losses in the bean market. We're also looking at what's going to happen with the tariffs out there. Is there going to be any retaliation? Not that that's telling people to sell beans, but it might give them enough of an inclination to go ahead and take some profits on their long bean positions. We came in, the commitment of traders report showed us long 183,000. They've been adding for the first half of this week. They had to get out of some of theirs, some of the long from the fund perspective. They did. They took out last week's lows at 143 3/4 and closed at the low of the day. So if we see confirmation about better rains that we've been seeing all week, if that is confirmed into that short-term 1 to 5 day forecast, we could see this bean market come off even more. There's slight support at 116. Below that, psychological $10 or 10.16 to $10. So we'll see what happens with that. With the beans coming off, that just pulled down corn. Corn has the most bullish of attitudes out there, and people are going to be looking at pullbacks in corns as buying opportunities right now. We did see July corn break down below where we rallied from yesterday after the report. So kind of interesting. When we had last month's report, February's report, it was overall bearish, yet we rallied out of it. This report out of the government has been bullish, yet we pulled back the second day. Now, why was it bullish? It was bullish because they're looking at South American production on corn, and they're saying, hey, our exports are going to go up because of lack of production down there in Argentina and in Brazil. So with that higher demand, we're seeing trader So with that higher demand, we're seeing traders add to the long positions out there. In the wheat, there was nothing out of the report yesterday that was bullish wheat. Wheat should go down or should continue to the downside. The only thing that's bullish wheat is the lack of moisture that we've seen out in the wheat area, and that can change dramatically. So that's why we had a little bit of a pullback today. We'll see if we're able to continue this downward trend or if we get a little bit of a bounce in the next couple days. As far as the outside markets are concerned, we had a pretty good rally in crude today. There's a level up there about 63 that's part of a wedge formation that we've been seeing. The reason we rallied was because people didn't anticipate any kind of rhetoric about North Korea. They figured with us willing to talk to North Korea or have a meeting with them, that might open up demand in North Korea. So that rallied up the crude oil market, along with the rig count going down for the first time in I don't know how long. So you're seeing those two dimensions come there, plus the stock market was on fire today. You're hearing a lot of rhetoric that's saying that this is going to be good for the economy with the tax cuts, and it showed up with an increase in 313,000 jobs last month. They're looking for payrolls to be up 205, it was up 313,000. So with that increase, that really put a little bit of a fire under the stock market. We closed at some highs. We took down a wedge formation. Our previous high in June S&P was about 27.95. Looks like we're going to test that on Monday. We get through that, you could almost see us get back up to that 28.80 area. So we'll see how that stuff progresses. Over in the cattle market, cattle closed stronger today. Still yet kind of neutral on the week. Cash cattle's trading at 126. April cattle got up to 123 by the end of the day, up $1.60. There's a wide gap there. Anytime cattle tried to rally this week, it was met with hedging pressure. So with today's rally, if we can build on that a little bit, get the Aprils up to that 126, 127 area, people will again look at selling it for hedge pressure or for hedging purposes. Anywhere over 116 in the June cattle is what they'll also be looking at. So that's a roundup for this week in the ag and commodity markets. If you have any questions, please give us a call here, 1-800-373-2525, or look us up on the web at www.biscommodities.com.